Hello, welcome to this video. Right before your screens is a simple chart for GBPUSD on the 4-hour time frame. This was a download that I did today, and it is on 6th December 2021. This is a various version of the standard trading model that I introduced from the previous videos. And as a norm, what I usually do when I meet such kind of setups, when I break down such kind of setups, I first of all draw the bearish version of the standard trading model. This is it. Where we said we need to have a sweep of liquidity. We need to first have a break of structure like this one. Then on that break of structures high, this is where we take our sell. We sell here. We sell here. We sell there to target this lower low as our take profit. That's what we said. Yes, with this. And see, before we start, we come to break down this trade. We should learn how to anticipate such kind of setups. When how do we anticipate such kind of setups? So I'm going back to the daily time frame to show you exactly how we came about that trade. So before you is a chart for same GBPUSD. This one now is on the daily time frame, whereby as a norm, we first of all draw this guy here. Yeah, this is the guy, this is the guy, this is the guy, this is the guy. Say we have sweep of liquidity, break of structure, this high, this is where we take a trade and we target here. That is a textbook example, yes. So as we can see right here, and we said that we need to have a market structure shift to make it a high probability one. Right here, we have a market structure shift right here. Then right here we have a sweep of liquidity. Right? With this sweep of liquidity, I can be down here. The clearest break of structure that we can see here on the downward side, on the bearish side, is this one. This is the first break of structure, and its high, which is this one right here, is now where we're supposed to take our trade, right? That is that is what our model is saying. That is where we are supposed to take a trade. Now we mark that point as a point of as a liquidity, as a point of interest. Then we drop down to the low time frame when to the 4-hour time frame. Coming to the 4-hour time frame, this is the liquidity that you just took on the daily time frame. This is where now the real deal happens. Now, how do we anticipate for a sell here? We said we must have a sweep of liquidity. Exactly what we have here, but we have manipulation. Manipulation is here, right? So with here we have a market structure shift right here. Hope everyone is seeing. Now, where do we take our sell? This guy here, if you drop down on the lower time frame, this guy here becomes the first break of structure. Then this guy becomes the liquidity. We take that trade. Boom. Our target is mitigated here. That's where we ride up to here. Yes? Yes, that is it. With this sweep of liquidity, I think my drawing is terrible. With this sweep of liquidity, we have a market structure shift here. Also have a first break of structure, and its high is right above here. ride this trade up to this point. This is our target. Ta-da! That is it. Yes, with finer details on where we set our stop loss and where how we do a risk management. Just visit the previous videos and you will see exactly what we mean. I am trying, I think I'm improving in this teaching thing. And next, I'm just gonna drop on the lower time frame and show you exactly what was happening here. See what was happening along here, which you could have taken advantage if you understand this model very clearly. So dropping down our time frame, this is on the 30 minutes time frame, same GBPUSD, December 6th, 2023. This is exactly what was happening here on 4-hour time frame. This one is in 4-hour time frame, but what we are now looking at is on the 30 minutes time frame. I just want to prove to you that the fractal nature of market. So this is the sweep of liquidity that we saw on the daily, right? Then we have here, this guy here is manipulation, sales sweep of liquidity. Then here you have a market structure shift, right? Yes. So here, this guy here, we have a first break of structure. This is a first break of structure. Then it's high, which is right here. Ta-da! With our model. Let me just draw it here so that you can see it very clearly. Craziness. This is it. This is the magic for all of you to see. Yes, break of structure. This high becomes where we set our sell limit. It's a sweep of liquidity. So we have a sweep of liquidity. We have a break of structure. It's high right here. Becomes magical. Ta-da! This is where you set your entry. This is where you set your sniper sell limit. And you target this lower low. Ta-da! That is it. Works like magic. This sweep of liquidity is right here. This first break of structure is right here. Then this high here, this endorsement is right here. Set your sell limit for a sniper entry right there and ride the market to this target, which is here. Ta-da! This one right here is a sweep of liquidity. Yes, this first break of structure high is a sweep of liquidity, right? This guy here becomes the first break of structure. Okay? I hope you guys understand. Then this guy here becomes a market structure shift for the next trade. Hope you understand what I'm saying. Then this guy here becomes our what? Our endorsement. This one becomes the first break of structure high. Ta-da! We mitigate it. Ta-da! What is our target? Our target was down there, which you already made it. Yes. Set your sell limit here. Set your stop loss. Set your stop loss on the high after the sweep of liquidity. That is how you catch sniper entries. Yes, as simple as that. As simple as that. This, let me show you what has been happening today to prove exactly what I'm saying. It's magical. This was downloaded at around 10 a.m. Yes, I mean. Now, even down here, you see the magic that was happening here. We started around Okay, let's start from here. There's a sweep of liquidity. Okay, this is a bullish buy. This is just a bonus for it. A bonus for you guys. This is a bullish version of it. This is a sweep of liquidity. Sweep of liquidity, which is right here. Then first break of structure, we get it from here. No, this guy, this is it. This is first break of structure, right? First break of structure, then its lower low, which is here, becomes inducement. Ta-da! We ride to the next liquidity. That's where we take our money. Some few pips. Then we also have this one. Okay, this one also works on its own. That is it. As simple as that. I don't know. You can break down all this trade, you will be surprised. So right here, we had a sweep of liquidity. Right here, we had the first break of structure. Right here. Then this guy here. This guy, if you can trade this guy, and boom, we smashed this high. That is magical. Then, when this market was here, I decided to mark this point, this here, because we had a sweep of liquidity right here. This one here is this one. Then first break of structure is right here, which is this, right? Then this lower low for that first break of structure is right here. This is what I marked. And I want you to go to your chart and see what has just happened in the markets, and see what I mean by a standard trading model. This is where we set our stop loss. This is where we set our order. Got precisely around here. That's where we set our order. Our sniper entry and ride to the next liquidity. I don't know which liquidity. Or potentially the target is right here. Ta-da. Yes, that is it. As simple as that. Simple as that. Yes. That is how we catch sniper entries. That is how we catch sniper entries. This one was in the 30 minutes time frame. Yes, we just have our sell model like this. You set your stop loss above there. Then you take your sniper entry here and you ride the market to this target. Ta-da! And you're good with your dollars. That is a magical standard trading model that works in all class of tradable assets. That's from futures, from stocks, Forex particularly, which I trade, from indices. Yeah, those volatility indices. If you are good with that, then you can work with this model to catch those sniper entries. Now, on I want to talk about something else that one of my guys, my mentors, said that in order to catch such like entries, you must able to identify the buyers of the market, as I've shown you on this daily chart. There's a statement that the first step to avoid failure is to have a bias. So how do you get a bias? How do you create a bias? How do you get a bias? How do you create a bias? Mostly, if you want to know where the market is likely to head to, just spend a lot of your time on the higher time frames. That is on the, yeah, you can even do monthly, then come to weekly. daily and the 4 hour. Those are the time frames that you're supposed to spend a lot of your time. Those are the time frames that you're supposed to spend a lot of your time. These smaller time frames, like the 1 hour, the 30 minutes, the 15 minutes, the 5 minutes, that is just you drop there to refine your stop loss. You drop there just to set your limits, your limit orders. It's just a way of refining your stop loss. That is exactly what you're doing in the market. You're trying to minimize the risk as we try to maximize the profits that we are getting from these trades. Yes, that is it. That is off today, and if you like this kind of content and you're getting informed by it, just give me a like so that I can get motivated uploading this kind of content, and comment on any question that you have. You can also share this video so that our family increases. This is the only return on investment that I require from you guys. Yeah, just subscribe to the channel, and you can also open that notification bell so that whenever I upload this kind of content, you will be updated, and we all trade together, right? Yes, that is exactly what I'm just requesting from you. Just a like, sharing of the video, comment. Yeah, I just want to comment. If you don't have anything to comment, just comment hashtag keep it simple. Yeah, that will do better. That is what we are doing. Yes, this is where the market is this is where we are doing it. Yeah, this is GBPUSD. Tomorrow I think I'm gonna drop I'm gonna do EURUSD. I'm gonna do some video on EURUSD and the trade that I'm gonna take tomorrow, and at least to prove to you that this strategy is standard. To me, it works in all forex pairs, right? Majority, yeah. But favorites: GBPUSD, EURUSD, NZD-USD, AUD-USD. Yeah, JPY is also magical. If it decides to move, yes, you'll like it. Thank you for watching, and bye.